A new market update with Michael Zuzolo, president of Global Commodity Analytics. He's going to speak about the overall macroeconomic data in the US, the USDA reports, something about South America and African Swine Fever. Everything right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Mike, uh, what do you think has generated all of this market reaction during this week?
Well, we've got the two big spring reports behind us now, Luis, but we still have a lot of unanswered questions, and it's really based upon weather and supply. And so the market, the La Nina bull, the weather bull has been rebuilding his and her positions as a result of not just South American weather, which I'd like to know more about from you if we can delve into that, but also from the European weather. And you and I think, may have talked last week about frost conditions in Europe and what that may have done to the French crop. The trade wasn't really looking at that until this week, and then the wheat really came on hard. Paris wheat futures are now back to $7.15 a bushel after the close on Thursday. And so we have a real weather market in the European wheat, and we also have a weather market brewing again here in the United States with the very cold outbreak expected to bring at least frost and maybe freezing temperatures to the western Kansas wheat crop. And that was a crop that was starting to come back around after being hit very hard by frosts and freezes late last year, and have still coming out of a drought there. In fact, a client got a hold of me yesterday out in Hays, Kansas area, and told me that he's looking at 80-degree temperatures 2 days ago, now going to be looking at frost and snow, and that while the wheat isn't jointed yet, which is an important thing, it's still probably not going to help that crop at all develop very well at this stage. So we're kind of going backwards on a crop that was really starting to come around for a hard red wheat belt. So the La Nina bull is still coming in and buying. And I think between that and the risk on trade in the outside markets, the uh, uh, reflation bull is what we've been talking about too here. That's really come on strong as well. But I think after Thursday's weekly export sales, when we saw four different commodities from the United States export sales perspective hit marketing year lows, two of them had a negative number. You're really, I think, starting to wonder at this point whether we aren't starting to ration demand effectively, especially as we see more ships load out of Brazil and get on the water and start taking care of China's soybean demand and crush demand starting in the 1st of May. So I'm at a pause. I told clients and subscribers on my daily video last night that we've got a real issue hitting these new 7-year highs in corn. We really are at a point where we need to feed the bull with weather because we do have some demand constraints starting to come in. And lastly, I'll throw out the geopolitics. I think the geopolitical issues are increasing enough that I'm starting to get more nervous. And I think April, much like March, is a month where you want to hedge and do that sell and defend model that you and I've talked about so much.
Yes, by observing the U.S. Weekly exports, most countries are buying more this year compared to a year ago. Why do you think is that? And do you? I also ask you if you think that's going to last.
Well, I think going back to the pandemic, in the grain trade, especially because of the supply chain being shown as so fragile, and we saw how it really could break down very easily. And we just saw that with the Suez Canal. I think the end user and the buyer, generally speaking, both domestically and globally, worked harder to secure extra bushels and put extra ships on the water, bought double in some cases, I suspect. And I think this is where, as you say, there's other countries that are going to continue to keep their demand high because livestock numbers are high. But I am worried and concerned, and have been for probably 7 months now or 6 months now, about China maybe double booking soybeans kind of playing it very wisely to see if the Brazilian crop is really there or not. And so I think that's what I'm really watching for as we get into the May time period. Does the United States really lose its pole position as the key seller and the key supplier to China? And it does look like, based upon some interactive maps that I purchased as far as vessel movement, there's a lot of ships. I think I counted about 150 ships on the ocean right now heading out of Brazil, mostly loaded ships, I should say, just of soybeans. And so I think we do have, even though I don't think that the crop is as big as USDA promotes, I do think we have some beans going out the door now from Brazil. And I think maybe that'll show up that China was indeed double booking. So that's what my concern remains to be.
Yes, and you mentioned the maps, and I watched particularly the U.S. maps in the Dakotas, and there is a significant drought there. Do you think that could bring negative impact on the U.S. both soybean and corn crops?
Yeah, I think that in that part of the country, once we get past the second week of May, because of the freeze line that we deal with in the fall, I think both Canada and the northern U.S. corn and wheat, spring wheat belt, canola belt, wheat belt in Canada are something that we're going to really have to watch very closely and start to probably pull down national yield in some of the oat crop, spring wheat crops, canola crops. But I'm probably not there yet, Louise, as far as wanting to pull down any national yield numbers. I want to give this market or this weather pattern a chance to come back around by the end of April, because we know that producers can really plant very, very quickly, especially in dry conditions. And so frost and freeze are probably the biggest issue right now, but they'll get the crop planted. It's just, and then once we get into the second week of May, if we haven't gotten any rains at that point, then I'll start to get nervous.
Yes, and regarding South America, Argentina has got significant rains over the weekend, and those rains are expected to happen this week in southern Brazil. So, do you think the market is watching that, and also the shipments in Brazil?
Yeah, and I think they're really watching Brazil more than anything right now. In fact, one of the contacts I have in the weather front suggested that maybe there was some damage, some harvest damage done to the corn and beans in Argentina because of the excess moisture in some areas. So I think the trade's really watching Brazil, though, to see if this drought gets broken. And the precip does look like it's lining up for the 7 days out. It looks like there's a pretty good chance for rain almost every day after day 7 all the way to day 14, day 16. This is one of those things, though, that the models have very low confidence levels at this point. And so we really have to have it happen. And so I think there will be a continuation of the trade wanting to keep a premium in the prices until they actually see the rains falling in Brazil. But, this is where I've talked to clients, and I think we saw this in the hog complex on Thursday, potentially. We had limit down move in a lot of the hog contracts on Thursday as a result of a very weak export sale report for the week, and China was not even a buyer at all. And I think what we're dealing with nowadays, and it's kind of like the term catching a falling knife, when prices start to go down, especially since funds have been allowed to increase their position limits, they can liquidate so quickly. And I think this is what we really have to be careful about. And that's why I like bought puts, and I like that sell and defend model, so that I've got a floor underneath me in case we have a couple, 3 or 4 days of limit down price action just on, say, a poor weekly export sales, or we have the rains come in southern Brazil, and all of a sudden the funds who are so long the corn right now decide they want to pull the plug, and there's a December gap in the futures market in the December corn chart. There's a gap around 480. That's 30 plus cents away now, and so that's not a small amount to give back in terms of being able to make a sale above $5 in the futures market versus being forced to make one when it goes back to 480. So these are the things that are kind of going around in my head right now.
I was going to ask you about the livestock market and its relation with both the corn and soybean markets. because I have seen recently that the lean hogs prices are unstable, and but I see on the other side the, of the table that the African swine fever is getting worse in China, not better. So how do you think that's going to develop as a result?
Yeah, I think technically speaking, and from a fund perspective, unless we start to see more demand come through in China, my sense is that as the April futures and hogs goes off the board, that may set up a correction. We may be starting it already, but key spring contracts, I think, can, when they lead the market higher, end up being kind of the end of the rocket fuel for a while, and the move up is stops for a while and a correction takes place. And so that's what I'm kind of laying the groundwork for right now in the hog sector, especially since the bellies prices here in the United States and the ham prices here in the United States are so high, and we're really out of a favorable season now. We're past Easter, we're going into summer grilling season. There is a bacon, lettuce, tomato, market seasonal out there in the middle of the summer when the tomatoes are ripe and ready to pick. But right now, it's really about beef at this stage. And so I guess I feel like that the hogs are due for a setback and a correction. And I kind of laid that out on my daily video last night as well. On a monthly basis, a significant correction would not be surprising to me, but I think the trade would probably come in and buy that back again with the issue with the African swine fever. I think this is where, if we have a good summer driving season and a good summer grilling season, the inflation bull, the reflation bull, will keep the dollar weak, and our export pace in the United States for meat will remain very, very strong. And that's a statement and an opinion, but I still have a little bit of a question mark behind it, just so I can see that summer driving season, that summer grilling season kick off and turn out to be strong as we get into the summer proper.
Yes, the U.S. Unemployment claims this week seems to have confirmed a trend of rapid growth.
Yes, and I think the restaurants are coming back online, but they're not coming back online as fast, maybe as I thought they would. And I think that's because, I don't want to say confusion, but I think that people are tepid right now about going out and eating out because we're, getting vaccinated in this country, but we're also being told to still wear masks. And that is very hard to do when you go out and eat. And so, yeah, you can take your mask off when you eat, but the feeling of being free again to do what you did back in 2019, we're still not there yet. And so I think there's still a little bit of tepidness in terms of people really wanting to go out and relive like they were pre-pandemic. So that's what I'm waiting to see, some of the national restaurant information, and some of the figures and some of the economic food data that will come in here in the next 30 days.
We have talked last week about a possible corn upside, that the other commodities would follow corn because of the Brazilian factor, that the second corn crop in Brazil have several complications. So what do you think is going to happen with wheat?
Wheat has been a very welcome latecomer to the party. I think it has a lot to do with the USDA report setting up a situation where the shorts were probably put on notice with the big drop in world wheat ending stocks. And then with the new weather coming in key areas of the country, I want to say that the wheat, and I think we talked about this as well last week, I want to say the wheat is going to make a counter seasonal rally. And that counter seasonal rally can happen as long as the dollar keeps going down or stays at or below 92 even. Right now, it's mostly a tailwind type market where the dollar's weak. The gold rallied substantially on Thursday. One of the things that's really a key right now, Luis, is you want higher interest rates because that suggests inflation, but you don't want interest rates to go so high that it chokes off demand for US treasuries. And right now, and what was good about this week was that we had a very strong treasury sale, a treasury auction by the United States that had a very strong demand base to it, and a lot of volume was picked up in terms of this auction. And I think the markets breathed a sigh of relief on that, And that actually, I think, added to the idea of that risk on trade and the commodities being a good asset to hold. I think this is a window of opportunity for the commodities to continue to rally. Corn, I think, is still the leader to the upside, but I think we're hitting $6 corn now. I think we really need the wheat to show us that it has more upside. In other words, corn probably has limited upside at this stage, especially if southern Brazil weather changes, without the wheat really taking hold and saying, I'm going to go up a whole nother leg. And instead of being at 630, 640, I'm going to get closer to $7 in soft red wheat. Is that possible? That's the big question mark. And today's export sales would say no, because the wheat, I think, the wheat export sales were actually a negative and a marketing year low. So we can't have that and expect the wheat to continue to charge this market up.
And you are seeing this increased demand for wheat coming from feed as well?
Mostly from feed. And I think that's the key. One of the bright spots of the weekly export sales was that the sorghum export sales were almost 660,000 metric tons. And if memory serves me right, that was close to a marketing year high. So we're still seeing a lot of feed go out the door. It's just I think the buyers are trying to find the cheapest thing out there because margins are really getting tight on the producer level for livestock feeding. But this strong livestock feeding pace, excluding what's going on with African swine fever, that should continue through June, July, from what I can tell.
And what do you see at the farm economy when those three commodities are at good price levels?
I don't see farmers selling much, and that bothers me because we are, after all, hitting 7-year highs in lead month corn, and we're putting a new crop on the ground in the ground right now. And so I really do think that this is where the farm economy could be the best it's been in 7 or 8 years if we do a good job marketing it. And I think that's what my job is, and that's what I'm going to really try and do a lot more aggressively here in the next couple of weeks, especially as we get towards the end of this month. Because at the end of this month, I think we're going to know whether the southern Brazil crop and the safrinha corn crop essentially is good or bad. I mean, I don't think it's going to be one or the other. I mean, I think it's going to be one or the other. I don't think it's going to be fair. I think it's either going to be good or it's going to be bad, from what I can tell. Does that resonate and make sense with you?
Yeah, so you can't say as of now that there is one specific month that would be better to sell corn.
One specific month would be the December, because we do have a new crop going in, and I think the December is the easiest one to buy back for a summer weather rally at this point. And you don't have to worry about, I don't think, as much the uh, potential downside in old crop. To me, seems less than the new crop once we get an idea of what the supply demand fundamentals are. In other words, I know that the old crop's probably going to fall faster than the December to get us back to a carrying charge, but I think that's going to be later. And I think what the December probably has more downside from a standpoint in the short term, especially with that gap below the market. So that's why I'm talking to clients about hedging new crop, letting it fall 30 or 35 cents, and then probably pulling the hedge off and then going just wide open again and hoping that we get another rally in the summer.
So let's keep watching US and South American weather.
Thanks for having me again, Luis.